Hey everybody, it is Lorelia, and I just realized I didn't update the title of this video. And so today's topic is going to be banks collapsing and real estate opportunities. I apologize. I'm still getting used to Restream after switching from oh boy, what is this? Uh, okay, I think I'm good. Okay, yeah, still getting used to Restream after switching from what was that other one called? StreamYard. So, hello. I know it has been a minute since I have been live, and so a lot of stuff has been in the headlines in the news, and I kind of stayed away from the chatter because it was a lot of doom and gloom. And so I'm probably, after this stream, I'm probably going to change the title of this video, but the title is Bank Collapses and Real Estate Opportunities. So in the past couple of weeks, we've saw two bank failures. We saw Silicon Valley and Signature Bank here on the East Coast. So two different banks on two different coasts. And so there's been a lot of, a fear. Many of the videos that I know that have been coming, across, my, I guess, my stream and on social media has been from a standpoint of doom and gloom. And so I'm going to tell you right now, I love it. The reason why I love it is because understanding economic cycles. If you're not familiar with me, I said in the beginning, my name is Lorelia, and I specialize with helping real estate investors leverage alternative funding sources to be able to acquire more real estate assets and expand their portfolio and build wealth. And so I'm not new to this topic. So going back to what I said about, um, I love it, and that economic cycles are always changing. And so for many people, and I'm going to go into why I like it. For many people, for the past couple of years, and I say since 2020, the pandemic, there's been a boatload of money that's pretty much just poured into the economy. And for some people, that may be good, that may be bad. I'm not here to pass judgment. But what happened was it gave people false hope. And when I say false hope, right now we're in a time and place that you are going to see those who really do this at a serious level and those who were kind of just jumping on a bandwagon and just doing it because it was just easy. Money was fluid, money was easy, people had it, everybody was just pretty much jumping on the bandwagon and just doing money grabs. So, with that being said, this is my second recession as a entrepreneur. I'm not going to talk about the other recessions because I was a person who was working. But my second recession, I mean my second a recession as an a business owner, as an entrepreneur, and as a real estate investor. So what does that mean? My story is, like I said, is pertaining to me. There are some people who speak from the place that back in 2008 they lost everything with real estate. Well, lo and behold, if you've ever heard my story before, that is where opportunity presented itself to me. And so that's when things really took off. Because in 2008, when many banks were failing, people were being foreclosed on, I use that opportunity to be able to wholesale bank owned properties to investors. And so This is way before Dodd-Frank. This is before seasoning. This is before there were a lot of rules in different states. So it was easy to do it. And of course, I did it with a double close. And so I made money. And so that's the short version of this story. So, with that being said, I noticed that there was opportunity where most people were clutching their fists and, living in a place of fear. There was an opportunity for me. And so that is what I see right now. That is what I see right now. There is big opportunity for those who understand how to stay above water and thrive in this changing economy. Because right now, all we're doing is going through a correction. We're going through a correction. And so the point of this video today is really to be able to recognize the real estate opportunities that are going to come before you. May not be this year, may not be next year, whatever, but there are going to be opportunities. Now, let me just say this for the seasoned, high level real estate investor, this message is going to be something that is a breath of fresh air. And so you will find that though those there's two different groups. There's the success minded, high level real estate investor, and then there's the real estate investor who was just, they may be new, they've never been through any economic cycles. When they got into real estate, things were fluid, money was cheap. And so that's why I said in the beginning, this current market is going to weed the curious from the serious, because the success minded and high level real estate investor is putting their ducks in the order. I said this in another video. There are going to be opportunities. And right now, that particular investor, whether it's man or female, they're not clenching their fist. They're positioning themselves to be able to take advantage of opportunities. So one may say, well, Lori, how are there opportunities? Banks are failing. And, it's a lot of doom and gloom. Interest rates are high. And that's why it's an opportunity. Because if you're not familiar with what I do, I help investors leverage alternative funding sources, not just business credit. Like I believe that conversation for another time, may touch on it today. Not just business credit, alternative funding sources. What that means is that is funding that is not backed by an institutional bank. And so understand the criteria of secondary funds that are backed by secondary sources. It could be private money. It could be a private equity fund. Understand that that is not funding that is backed by an institution. So with that being said, now is the time. The success minded, the high level real estate investor, that's what they're doing right now. They're positioning themselves, they're building relationships, which is why I have not had time to come on YouTube. I know I'm streaming on a few platforms, but primarily I'm on YouTube. I haven't been able to be able to come before you live, is because those individuals are positioning themselves. They want to know what kind of funding opportunities are out there, because understand, as more doom and gloom come into the marketplace, and remind you, it's going to be more, it's going to weed a lot of people out. The curious, they're going to weed out. Like they're going to weed out the quick individuals who are looking for a fast payday. they're going to weed out. They're going to weed out. The individuals who are telling you that they're going to help you to get a an American Express business platinum card and going to get you started in real estate, they're going to weed out, because this is what I tell people. Alternative funding goes beyond just a business, a credit card. By all means, I'm not here to throw shade at anybody. If that is what you want, all you really want is to be able to acquire a few business credit cards and then maybe invest in real estate, then I can tell you anything that I share with you is not going to resonate with you. And the reason why I say that is because my primary skill and how I help real estate investors has to do with analyzing the deal and getting funding. That is why I've said in other videos, funding is fluid, even in this market. But this is where the skill comes in, the ability to be able to creatively put together a different scenario with funding to get you into the deal. Because this is the mindset of the amateur. The amateur real estate investor, and many of those who are online really speak to that person. They're telling them to get the money, and then once they get the money, then start investing in real estate. So that's why you have these business credit slash real estate experts who they doing fixing and flipping, and then they're helping you get a business credit card. And I tell people that's not what I do. Like, I don't have no interest in teaching nobody how to fix and flip. I do not fix and flip. A lot of the things that I personally invest in as a business owner is probably of no interest of the clients that I work with. My level of skill has to do with being able to help you put together a business funding capital stack, not just credit cards, because for every deal, credit cards may not be it. That may not be it. But so if you're dealing with a business credit expert and their only play is business credit cards, then understand that's all they do. You know, that's not what I do. For example, client of mine right now I'm working with owns a commercial um storefront with its, multiple stores. They want to sell. Now, they've worked with a realtor who specializes with, commercial um real estate, but their name was given to me as a recommendation. And from that recommendation, I shared with them some strategies on how they can get the current tenants who are in their place of where they own commercial real estate, who has a track record of paying them, and that they can be their next buyer. And so the owner of this commercial real estate place was like floored, because they didn't even know that this was an option. They didn't even know that there was a financing opportunity in the commercial space where, as long as that person, their tenant in this commercial space, can show that they are, producing some type of income, they have a track record, they have books and record, there are creative financing sources. Not an institutional bank that's not going to your local bank, going to the business owner who's renting the place, going to their bank, going to the owner's bank. No, this is alternative funding, which will allow that tenant to be able to go into a commercial purchase. And it's not based on, does this person own a home? Has this person ever owned commercial real estate? It is based on the ability that this business owner who's renting from the person who is selling that they are in position to buy. We're working on that right now. So that's why I say alternative funding goes beyond just business credit. That's why I said this, I love it. I love the opportunity of what is going on right now, because you are going to see a shift. It's going to weed out the curious, and you're going to really see who's serious. Because I've said before, that whole play of personal credit sweeps, business credit, that's gonna, I've been saying that if you've watched any of my content, primarily on YouTube. I was saying this back in 2018, talking about AI, talking about artificial intelligence. Those plays aren't going to work. They're not going to work for the person who wants to do this long term. That's why I said the high level, success minded real estate investor, they're not looking for a quick flip. And when I say flip, I don't mean it actually flipping properties. I'm talking about fast money. They are looking to really build relationships with lending sources that when deals come down the line, they're in position to be able to move forward. Because no one wants to use all their cash. I mean, it's no investor who's seasoned, who's been doing deals. They're not looking to use their cash. They're looking to leverage. But most of these individuals who are saying that they help you to get funding for real estate, they got one play, and it's the business credit card play, and it's liquidating credit cards. That's the play right there. It's not the play of other sources, because this is what I tell people. I am no good to you if I'm out there fixing and flipping and out there with boots on the ground doing real estate, because it's hard to do both. It's hard to do both. You can't be keeping your eyes and ears and building relationships on the funding side, because remember, we're talking beyond credit cards, and also you're out there, you're flipping houses too, unless you're just the I guess a real estate funding person, that you just have one play. You do FHA, you probably do some VA stuff. But of course, that's not what I do. I'm not going to leave this video for that. But if you've looked at my other videos, I talk about some of the creative ways that you can use unsecured funding. And my questions always, I ask people, what is the advantage to you to use unsecured funding? Unsecured funding is funding that is not backed by anything, but you want to pair it with an asset class that is secure. Why do you want to run that play? Why? So that's what I'm saying. Two different individuals. There's the individual who is an amateur, no disrespect, but that person is really coming from a place of, I just need to get money. And then when I get money, I'll worry about my deal. And I tell people this all the time, because I started in 2008 wholesaling. You don't need no money for a deal. If you have a deal, you don't need the money. But this is once again the novice. They truly believe that they need money to do a deal. You don't need money to do a deal. If you have a deal, the money's not hard to get. But the thing is that most people do not, and when I say most people, amateurs, they can't identify a deal. They can't communicate to you or to a lender why it's a deal. And then they can't even communicate why it's even profitable for the lender to even move forward with the deal. They can't have those conversations. So that's why they speak from the place of, let me just get money. And so the so-called business credit expert knows this. So now they'll just tell them, I'm going to teach you how to liquidate credit cards. And then when you liquidate credit cards, then I'm going to teach you how to do a fix and flip. And by no means, if that is what you want, then understand, then that's the play. But that's not going to be the play if you want to take advantage of opportunities that are still going on now. And one may say, well, Loretta, interest rates are high. I'm not doing anything. I want interest rates to be, what they were, a year ago, back in 2020. I want the 2%, 3%. This, and I tell people all the time, I started in real estate when interest rates were what they were or are now. So don't get me wrong. Yeah, I did go through the economic cycle when it was low interest rates, but I also understand I've seen interest rates now. And this is what I tell anybody. Don't listen to me. Look in your market. Those that are doing deals, whether they're doing fix and flips, they buying multifamilies or what have you. Or maybe go to your local RIA and see those who are doing deals and see if anything changes. Those who are seriously doing deals. And this is what's going to happen is you're going to see a bunch of people who are going to say, oh man, all these great deals. Like I said, mark my word, about a year from now, maybe in 2024, at the end of the year, a lot of great opportunities are going to come down the line. And then people are going to say, oh wow, man, I really wish I could take advantage of those deals. But you're not in position. So my point of all this is, I've been talking for 20 minutes, is really to share with you. You have to pick the side. You either going to pick the side of doom and gloom, or you going to pick the side of opportunity. One thing that I will share with you, the two banks that did fail, they didn't have a large exposure to real estate. That's just something for you to just keep in mind. They didn't have, and when I say exposure, meaning a large portion of their portfolio was not even in a real estate class. So when I hear these people online, spitting all this doom and gloom, to me, I feel like it's clickbait. I think it's a clickbait to prevent people who may have the opportunity to take advantage of some things, but they're so fearful they're not going to do nothing. And you're going to see a group of individuals who have access to things, understand economic cycles, and they're going to win. They're going to win. So that is why on this channel, YouTube, this is primarily where I am, but I am streaming on LinkedIn. I am streaming on Facebook. I will be talking more about opportunities. I will not be talking from the place and the space of doom and gloom because, number one, that's not my experience. I went through doom and gloom in 2008, and it was a great opportunity. In 2020, we had we had the pandemic. Things were great then. You know, you got to know in business, no matter what business you're in, how to pivot, how to really understand economic cycles. And that's nothing new. I've always been talking about it. And to be able to really position yourself. It's all positioning. When it comes to funding, and anybody who's learned from me, I always tell them, if you are positioned correctly, I'm not talking about these whiz bam, just create an LLC and create a business profile and do the DNB and all this other stuff. Hey, if that's your jam, that's your jam. Nothing that I'm going to say is going to make sense to you, is going to appeal to you, because that individual who listens to that, they march to the beat of a different drum. But for the individuals that I have been saying, funding and access to money will become your oyster. It will become your oyster. Even in these type of economic cycles. There's a bank right now, big national bank, I won't call their name. They're throwing money at me. Like, I mean, to the point where, I'm like, okay, I'll get there, to move forward. So I'm only speaking from experience of myself and my clients. Opportunities are there for those who are positioned correctly. So tomorrow, or sometime this week, won't even say tomorrow, I shouldn't say that, but sometime this week, I am going to share with you understanding the data for a deal. I'm going to give you a peek behind the curtain. I've never did this because usually I keep this information just for clients I work with. But I'm going to share a 10-minute piece of really an hour and a half session. And I'm going to share with you the data and understanding the data of the deal. Because when you understand the data, you don't get, you know, um, emotionally attached to the interest rate, what people are saying, all these emotional things that trigger people. Because once again, the high level real estate investor is really data driven. It does the numbers make sense? All decisions are based on numbers. It's not based on what are they saying on this news channel? What is the guru or the expert saying? Like I tell people, don't even listen to me. Look at the numbers. Let the numbers make the decision for you in terms of what are your numbers to your business to be able to move forward funding. Because even though you have a lot of people who teach the very common play, liquidating some business credit cards to invest in real estate, that's just one play. What about the other opportunities unsecured that you can be willing to tap into? But it's based on numbers. Because for some things, a line of credit may serve a better purpose. Key point an example. Got another example for you. Client of mine, real estate investor. They want to be able to, instead of when they're doing fix and flips, they wanna own the equipment, instead of renting it out or depending on um, contractors or professionals that they hire. They want to buy the equipment. And so what we're working on is being able to position that their business, their real estate and business, and we're going to let it be a whole nother entity. And that particular entity is going to be the entity that is going to acquire the equipment to be able to do the things for the real estate business in terms of rehab. So you have the real estate business, which the investor is involved in, but they want to own the equipment. Most people would think, oh, just buy the equipment with business credit cards in the real estate business to be able to purchase the equipment. No, we're doing a whole nother play. We're doing a long-term funding strategy where there's going to be a whole nother entity. The opportunities for them to get the financing is very advantageous. And with that, they will be able to take advantage of tax write-offs like depreciation, the financing for the equipment, the whole 9 yards. And so one may say, well, why not put everything in the real estate business? Well, if you understand, like I always say, different plays of doing things and looking at your numbers, it just fiscally and financially didn't make sense to do that. They came out better with better financing terms with not doing it under the real estate business. So that is what I plan to share this week. I want to really share with you all understanding the data of this industry, so you can make data-based decisions when it comes to funding and not emotional-based decisions. So, like I said, if you want to be informed of when I'm going to be posting that video, or if you don't catch me live and you want to catch the replay, you can get onto my email communication list, www.neverloseadeal.com, because there you'll have all the updates. So looking forward to sharing that information. If you're watching the replay, please leave me a comment. Let me know your thoughts. I understand my only goal now in this economy is to go high. Right now, we're in the space where a lot of people are just regurgitating same information. They're running one play, and in order to rise above that noise is to go higher. So the conversation for me is going to be really high. So, for the high level success minded real estate investor, they're going to get it. For the person who's an amateur and they kind of need to be proven, well, you got to show me this, show me that. I'm gonna tell you right now, nothing that I'm gonna say to you is going to make sense. So once again, this is Lorelia and I'm signing off. See you in the next video. Bye.